What is the next step then? You've got your Model S, you're profitable, you're actually producing more Model S's than you originally thought you would. So what is the next step? Is it now focused on the Model X, the SUV?
Well, in the very near term, the next step is delivery of Model.
Despite the economic fallout from the pandemic, the stock market has been on a rocket ride this year after recovering from lows in the spring. And few companies have seen a greater rise than electric car maker Tesla. Let's take a look by the numbers. Today, Tesla officially became part of the S&P 500 stock index, which tracks the fortunes of 500 large companies here in the U.S. Tesla was added to the S&P after reporting 5 straight quarters of profits going back to last year.
So I present to you the Cybertruck.
Elon Musk has had a rough few days. Tesla dealerships have become the target of protests across the country, and its stock price has taken a big nosedive. Just today, Tesla's stock price dropped by 15%. There are going to be some hangry shareholders there. That made it the worst day for the company in almost 5 years. Twitter also had a bad day, and that's saying something, folks.
For years, Tesla wasn't just a car company, it was a revolution. The impossible made possible, the future made present, and at its helm, a man who seemed to walk on water. But something has changed. The spell is breaking, the stock is tumbling, the sales are dropping, and the faithful are beginning to question. Welcome to Tesla's $800 billion Wipeout, a deep dive into what might be the most dramatic reversal of fortune in modern business history. We're going to explore what's happening to Tesla, why it's happening, and what it means for the future of electric vehicles, autonomous driving, and the vision of a sustainable future that millions have invested in, financially and emotionally. To understand Tesla's current predicament, we need to look at multiple factors: the financial story, with plummeting stock prices and sales figures across the globe; the competitive landscape, where Chinese manufacturers like BYD are rapidly gaining ground; the political fallout, how Elon Musk's government role and political alignment has created unprecedented backlash; and finally, the future horizons, Tesla's ambitious bets on robo-taxis and humanoid robots that could either save the company or sink it further. This isn't just a story about a company or its controversial CEO. It's about the future of transportation, the realities of technological disruption, and how quickly public sentiment can change. So buckle up. This is going to be a wild ride through the most turbulent chapter in Tesla's history. Let's start with the numbers, and they're not pretty. Since January 2025, Tesla's stock has plummeted more than 40%, making it one of the worst performers in the S&P 500. This isn't just a minor correction, it's a massive erosion of value, with over $800 billion in market capitalization evaporating since December. To put this in perspective, that's more than the entire value of companies like Toyota, Volkswagen, and GM combined. And this freefall comes after years of meteoric growth that made Tesla the most valuable car company in the world. Wall Street analysts are divided on Tesla's future. Some predict the stock could fall as low as $182 per share, while others see a potential rebound to $540. This wide range tells us something important. No one really knows what's coming next. But the stock market can sometimes be irrational. What about actual sales? Unfortunately for Tesla, the picture there is equally concerning. In Germany, Tesla sales dropped by a staggering 76.3% in February 2025 compared to the previous year. In Australia, deliveries fell 65.5% in the first 2 months of 2025. In China, arguably Tesla's most crucial market after the US, sales plummeted 49.16% in February. Even in the United States, Tesla experienced its first annual sales drop in over a decade. The company that once couldn't build cars fast enough to meet demand is now facing a global sales crisis. This is more than just a momentary dip. Projections indicate that Tesla is expected to ship the fewest vehicles in the first quarter of 2025 since the third quarter of 2022. The growth story that justified Tesla's enormous valuation is showing serious cracks. Perhaps most tellingly, those on the inside appear to be heading for the exits. In March 2025 alone, Tesla board members and executives sold over $100 million worth of stock. James Murdoch, a Tesla board member, sold approximately $13 million worth of shares on March 10th, coincidentally or not, the day that saw Tesla's largest single-day stock decline in 5 years. Kimball Musk, Elon's brother, unloaded 75,000 shares valued at around $27 million in February. And Robin Denholm, the chairman of the board, sold more than $75 million in shares between mid-February and mid-March. While some of these sales were part of predetermined plans, the scale and timing raise eyebrows. When the people closest to a company start selling in large quantities during a downturn, it rarely signals confidence in an imminent turnaround. For years, Tesla had a significant head start in the electric vehicle race, but the competition has not only caught up, in some cases it's pulling ahead. The most dramatic challenger is BYD, Build Your Dreams, a Chinese company backed by Warren Buffett that has transformed from a battery manufacturer into the world's largest EV producer. The numbers tell the story. While Tesla's sales in China dropped 49% in February 2025, BYD reported a 47% increase. In 2024, BYD sold 4.3 million vehicles globally, more than double Tesla's 1.8 million. Even more concerning for Tesla, BYD surpassed it in global battery electric vehicle sales in the fourth quarter of 2024, selling nearly 600,000 units compared to Tesla's 495,000. This isn't just about volume. That's a remarkable reversal in what was once Tesla's growth engine. The threat isn't limited to BYD or to China. Traditional automakers have finally gotten serious about electric vehicles, while new startups are targeting specific segments of Tesla's business. What's changed? For one thing, Tesla's competitors are now offering cheaper electric vehicles with increasingly competitive technology. The price advantage Tesla once enjoyed has been significantly eroded. The supercharger network, long one of Tesla's biggest advantages, is now being opened to other manufacturers, while competing charging networks continue to expand. Another moat around Tesla's castle is disappearing, and the technology gap is narrowing. Advanced driver assistance systems from other manufacturers are catching up to Tesla's autopilot and full self-driving capabilities, while interior technologies and battery innovations are becoming more widespread. In a market where Tesla once stood alone, a crowded field of worthy competitors now exists, and many of them don't carry the political baggage that's increasingly weighing Tesla down. Tesla's challenges can't be understood without addressing the elephant in the room: Elon Musk's deep dive into American politics. In January 2025, Musk was appointed to lead the Department of Government Efficiency, DOGE, in the Trump administration. This wasn't just a ceremonial role. Musk was tasked with finding significant budget cuts across the federal government. The appointment marked a dramatic evolution for Musk, who once served on advisory councils for the Obama administration and initially maintained relationships across the political spectrum. But in recent years, his political alignment shifted significantly rightward. For investors, this raised immediate concerns about Musk's divided attention. As Ross Gerber, a longtime Tesla investor, put it, quote, "I think Tesla needs a new CEO. Either Elon needs to come back and run Tesla and quit everything else, or he needs to keep his job working for the government and we need a new CEO at Tesla." But the impact goes far beyond questions of time management. It's fundamentally changing how millions of consumers view Tesla as a brand. For years, Tesla ownership was associated with progressive values, environmental consciousness, and technological forward-thinking. But Musk's political transformation has created a serious identity crisis for the brand. The backlash has manifested in disturbing ways. In March 2025, a Tesla service center in Las Vegas was set on fire using Molotov cocktails with the word "resist" spray-painted on the facility's door. 2 Cybertrucks were torched in Kansas City, and a doxing website reportedly leaked personal information of Tesla owners across the U.S. Less violently, but perhaps more damaging for Tesla's image, anti-Tesla posters have appeared in cities like San Francisco, urging owners to sell their vehicles with slogans like, "Sell your swastika, don't be carplicit." Some Tesla owners have even taken to displaying bumper stickers with messages like, "I bought this before we knew Elon was crazy," and "Anti-Elon Tesla Club," a remarkable phenomenon where consumers are actively trying to distance themselves from the brand they purchased, while the vehicles themselves continue to receive positive reviews, with the 2025 Model 3 maintaining a 90% recommendation rate from owners. The brand's association with controversial political stances appears to be driving away potential buyers and pushing current owners to consider alternatives. Tesla built its reputation on one thing above all else: technological innovation. But has the pace of genuine innovation slowed while competition accelerates? The Model 3, released in 2017, and Model Y, released in 2020, remain Tesla's bestsellers. The Cybertruck, despite its distinctiveness, experienced numerous delays before finally reaching customers in limited numbers, and the long-promised $25,000 Tesla that would truly bring electric vehicles to the masses remains elusive. Meanwhile, full self-driving, a technology that customers have been paying for since 2016, still hasn't achieved the fully autonomous capabilities implied by its name, despite numerous promises from Musk about imminent breakthroughs. Software updates continue to add features to existing vehicles, but the pace of hardware innovation appears to have slowed compared to Tesla's earlier years, when each new model represented a significant leap forward. Even as Tesla's vehicles maintain generally positive reviews, long-running concerns about build quality and service have persisted. Consumer Reports has consistently noted issues with Tesla's build quality, placing the brand near the bottom of its reliability rankings. While these issues haven't prevented strong owner satisfaction scores, they represent an ongoing vulnerability, especially as competitors improve their offerings. Service has been another persistent challenge. As Tesla's fleet has grown, the strain on its service network has become evident. Many owners report long wait times for appointments and parts, challenging the traditional advantages of electric vehicles' simpler maintenance requirements. These issues might have been acceptable to early adopters who were primarily motivated by Tesla's technology and mission. But as electric vehicles move into the mainstream, such concerns could increasingly drive consumers toward competitors offering more conventional dealer networks and established service infrastructure. Despite Tesla's current challenges, the company continues to pursue ambitious projects that could radically transform its business, and potentially provide the most immediate of these is Tesla's robo-taxi service, scheduled for initial launch in June 2025 in Austin, Texas. Using existing Model 3 sedans and Model Y SUVs equipped with Tesla's full self-driving software, the service aims to provide fully autonomous rides on demand. Elon Musk has expressed confidence that these vehicles will operate in the wild with no one in them, a bold claim given the technological and regulatory hurdles that have prevented other companies from achieving similar goals. Following the Austin launch, Tesla plans to expand the service to California and other regions across the United States by the end of 2025, with European expansion targeted for 2026, potentially priced under $30,000. If successful, a robo-taxi service could transform Tesla's business model from selling cars to selling transportation as a service, potentially generating higher margins and steadier revenue streams than vehicle sales alone. But success is far from guaranteed. Regulatory approvals remain uncertain, and the technology must prove itself safe and reliable in diverse real-world conditions, a challenge that has proven more difficult than many autonomous vehicle companies initially anticipated. Perhaps even more ambitious than robo-taxis is Tesla's push into humanoid robotics with its Optimus project. Tesla has plans to produce 10,000 Optimus robots in 2025, with production lines designed for an initial monthly output of 1,000 units. The long-term goal is astonishingly ambitious, reaching production of 10,000 units monthly and eventually millions annually. Initially, these robots are intended for use in Tesla's own factories, performing routine, monotonous, or dangerous tasks. But the company's vision extends to broader applications in logistics, production processes, and even household chores. Tesla is developing key components in-house, including what it claims is a highly precise humanoid hand, offering more dexterity than any other robot hand currently available. While the initial cost will likely be high, Tesla aims for a price point under $20,000 once mass production is achieved. Elon Musk has described Optimus as potentially Tesla's biggest product ever, with an anticipated market volume of $10 to $20 billion annually. Skepticism about this timeline and capabilities remains widespread in the robotics community. But if successful, Optimus could represent a bold diversification for Tesla beyond the automotive sector. So where does Tesla go from here? Let's explore 3 potential scenarios for the company's future. Scenario 1, the resurgence. Tesla successfully launches its robo-taxi service, proving that its full self-driving technology was worth the wait. The Optimus robot exceeds expectations and opens new markets. Meanwhile, vehicle sales recover as political controversies fade and product updates reinvigorate the lineup. Tesla reclaims its growth narrative and stock price momentum. Scenario 2, the stagnation. Tesla maintains its position as a significant electric vehicle manufacturer but fails to achieve breakthrough success with its moonshot projects. Growth remains modest as competition intensifies. The company becomes more like a traditional automaker in terms of margins and valuation, though still with a technology edge. Scenario 3, the decline. Production and quality issues persist while sales continue to fall. Robo-taxi and Optimus projects face significant delays or underwhelming results. Political backlash intensifies, and leadership controversies continue to damage the brand. Eventually, Tesla could become an acquisition target for a larger automotive or technology company. Which scenario seems most likely? Comment down below and let us know. The truth is that elements of all 3 could play out in different aspects of Tesla's business. The company has demonstrated remarkable resilience in the past, overcoming production challenges and financial pressures that many thought would be fatal. At the center of Tesla's future is a crucial question: the role of Elon Musk. Musk's vision and drive have been fundamental to Tesla's success. His ability to inspire employees, attract talent, raise capital, and generate public excitement has repeatedly defied conventional wisdom about what's possible in the automotive industry. But his divided attention between Tesla, SpaceX, X, formerly Twitter, and now his government role raises legitimate questions about his capacity to lead Tesla through its current challenges. And his increasingly polarizing public persona has transformed from a net positive to a potential liability for the brand. Some investors, like Ross Gerber, have explicitly called for new leadership. Others maintain faith in Musk's ability to navigate this difficult period and emerge stronger, as he has done before. Tesla's board faces difficult decisions about the company's leadership structure and whether changes are needed to address the current challenges. Whatever path they choose will significantly impact Tesla's ability to execute on its ambitious plans while rebuilding market confidence. Tesla's story is about more than just one company or one controversial CEO. It's about the future of transportation, energy, and technology, and the complex interplay between vision, execution, and public perception. Whatever happens to Tesla, the electric vehicle revolution it helped spark is now irreversible. Every major automaker has committed billions to electrification, and consumers increasingly see electric as the future. This alone represents a significant achievement for Tesla's original mission. But Tesla's ambitions always extended beyond simply electrifying transportation. The company's vision encompassed autonomous vehicles, solar energy, battery storage, and now robotics, a comprehensive approach to sustainable energy and transportation that remains unmatched in its scope. The current backlash and challenges may ultimately prove to be a necessary reset, forcing the company to refocus on execution, quality, and customer satisfaction rather than increasingly speculative future promises. Thank you for joining me for this exploration of Tesla's biblical backlash. If you found this analysis valuable, please like, subscribe, and share your thoughts in the comments below. I'm Anonymous, and I'll see you in the next video.